If you're a homeowner or thinking about buying in the Chicago suburbs, here's your December 2025 market update. December is always an interesting month in real estate, so stick around because I'll break down what we're seeing right now and what this could mean heading into the new year. Starting with month supply, which tells us how long it would take to sell all the homes currently on the market if no new homes were listed. In December, we're at 1.4 months of supply. That's down from 1.8 months in November and slightly lower than 1.6. Under 4 months keeps us in a seller's market, even though activity naturally slows this time of year. Next is the median sales price, or what homes are actually sold for. In December, the median sales price in the Chicago suburbs was $345,000. That's down slightly from $350,000 in November, but still up from $325,000 in December of last year. So even with a small seasonal dip, prices are still higher than they were a year ago. The median list price, or what homes were originally listed for, came in at $320,000 in December. That's down from $325,000 in November, but up from $309,000 last December. This lines up with what we usually see at the end of the year, where sellers price a bit more conservatively to match buyer demand. Let's talk list to sale ratio. In December, homes sold for 98.3% of their list price. That's slightly lower than 98.7% in November and just a touch higher than 98.2% last year. In real terms, that would be like a home listed at $300,000 selling for around $295,000. Negotiation is happening, but homes are still holding their value. Wondering how long homes are taking to sell? Well, the median days on market in December was 14 days. That's up from 11 days in November and exactly the same as December of last year. This small increase makes sense with the holidays, fewer showings and more buyers hitting pause until January. For buyers, interest rates are an important piece of the puzzle. As of January 12th, the average 30-year fixed interest rate is about 6.01%. That's about a 0.25% drop over the past month. This is just the average. Your personal rate will depend on a lot of factors, including your credit score, debt to income, purchase price, and a lot more. A lot of buyers are even seeing rates in the fives now. That drop has already brought some buyers back into the conversation who were waiting for rates to cool off a bit. The stretch between Thanksgiving and New Year's is always the slowest time of year in real estate. Because of that, it's no surprise that we're seeing slightly lower prices, a drop in month supply, and days on market ticking up. On a bigger scale, there's been a lot of discussion nationally around housing affordability and interest rates. Last week, Trump made 2 big announcements that can affect the housing market. The first one being his plan to end corporate investors purchasing homes. While this sounds like a big deal, only about 1% of homes are actually owned by these corporate entities, especially in our area in the Chicago suburbs. This will most likely not make a noticeable difference for us. The second announcement was that he also instructed Fannie Mae and Freddie Mac to purchase $200 billion worth of mortgage bonds to bring down mortgage rates. While this sounds like a big deal, the total market is closer to about $12 trillion, making this amount just a drop in the bucket. The day after the announcement, we did see that 0.25% dip to interest rates, making them the lowest they've been in years. However, this change probably won't help much with the overall affordability issue that we're having. Here in Illinois, our biggest issue is the lack of inventory and the cost of building new homes. So any changes to combat that could help us see more of a shift locally. Whether you're thinking about buying, selling, or just keeping an eye on the market, having a plan is key. If you'd like a personalized home value, want to talk about your options for 2026, or want a market update for a different area, feel free to reach out. I'm always happy to help you make sense of the numbers and create a plan that works for you.